Good afternoon, good morning. Well, right now we know that it's early hours in the morning in the USA, but it's almost 5 o'clock afternoon in Izmir, Turkey. So I'm just filming this video in English as it's the last day of April. Tomorrow is the 1st of May, and there are very important events taking place. Although it's not a weekend, as you know, tomorrow is the 1st of May. Some businesses are closed for the Labor Day in Turkey. But I'd like to give you the details of the what is happening all around the world and especially in the USA. Very extreme figures are coming from economic results and how to evaluate them. Okay, so I will also show you the site of investing to help me in this numbers explanation. So let me get back to the investing website. Okay, now I don't know how clearly you can view from here, but I would enlarge it for them for you so that we can view better. Okay, I think it's now better viewable. Okay, these are the news that came in this afternoon. We were expecting ADP non-farm employment change in April was 147,000 last month, and expectation was 114,000, whereas the non-farm employment change came only 62,000. That means much little worse than expected. Yes, you can see much less people are employed, maybe half of what's expected. This is a recession indicator that people are not getting as many jobs as they could. Core inflation prices, on the other hand, they increased core PC prices by 310 instead of 310, 350 for the quarter one, which includes, of course, the past months of January, February, March. 3.5 means there is also inflation, higher inflation. We know the reasons for this extreme exports from China before the tariffs hit the American consumer. But they increased the prices already while they were buying them. So this is also not recessionary, but this is stagflationary because together a bad mix of losing jobs and increasing prices is called stagflation, which is much worse than inflation or recession. Okay, so and coming down to the lower part here, GDP, the first quarter American gross product also fell for the first time in this quarter, which means recession is already in for the first quarter. If a second quarter is followed by another minus figure, that means America is officially in recession. United States will be official. The price index of GDP went up. So although you see some of them red, some of them green, they're all, depending on the current situation, they're all very negative figures. Now, underneath, there are some Canadian figures, but after that, we were expecting more news from the USA, starting 9:45 p.m. Chicago time. PMI, Purchasing Managers Index, came in worse than expected. As you know, this coming under 100 or 50 is bad. So they were already bad. They are getting worse. There is no production in Chicago. It's getting not no, but it's getting worse and worse. And the core PC index, this came down. Although this may have been very good news if fighting against inflation monthly came better than, right now it's not viewed. I will not view it as a good news because this means recession is coming down very strong. That's why the core prices also came down. Okay. And for March, it was 2.626. This is month of month. This is year to date, 2.6. So it doesn't matter. It's just it's not good that Fed is winning the inflation fight. It's that USA is entering recession, and that's what's now we can evaluate it much different than we would have if we weren't entering a recession, because all the top figures I explained you are recessionary. As you see, price PC index also went up instead of 2.2 going down. It went up a little bit more than, but again, this is not good news because of the recession expectation. Now today, the polls are showing there is a chance of Fed decreasing interest rates by 1%. That's 25 basis points, 4 times this year. Well, we are already starting May, so that leaves us 7 months, right? 7 months. Four of them will be bringing down interest rates because America, United States is going into recession. This cannot prevent recession. It's too late for recession to come back, especially when tariffs are already just starting. And so it's going to be, we are going to measure how deep the recession is going to be. And we can see this right here at the pending home sales. I'm just checking sure that we are all on the same page right now. Okay. The pending home sales, they were up 2.1%. They were expected to be come down to 1%. They suddenly increased sixfold against expectation, threefold against last month. There is a month-on-month extreme increase. Reason why people are panicking. They are buying homes like crazy, running onto anything physical they can put their hands on, gold, houses, whatever, whatever, because it's good to be on anything but US dollars right now. Okay, the people are running away, foreigners are running away, but also buying physical products, touchable products. Okay, physical, touchable. Okay, now this latest figures we are expecting that just came in this yellow area. It's about oil. It's not the big deal, but the crude oil inventories, instead of going up, they are coming 2.7 million down. So, which is again another bad surprise. It's a 3-star expectation, which means important expectation. They are also all minus, minus, minus. So basically, this way we are not closing the month, but we are closing the month of not the week, but we are closing the month of April. Okay, so let's get back to my face. Okay, it's only 7 minutes video right now. As I explained you with the numbers, uh, the numbers which came in, although they look like mixed, they are not mixed. They are recessionary and stagflation, which means while there is loss of jobs, loss of money, there is also price increases at the same time. Normally, you would think when the prices are, when people are getting jobless, they cannot buy much things, but so the prices will start coming down. But the opposite happens because the cost of, they prefer not to even sell their product, and this brings in inflation together with people increasingly losing their jobs. This is an expectation, not an happening at the moment, but strong evidences of this expectation. So when would they hit you? Well, first of all, empty shelves will hit the USA because the ships coming from China were loading up many of the shelves. They are coming in very little quantities. In fact, today China also has a country, let's say, wealth fund, and wealth fund has 1.3 trillion dollars worldwide. They said they are selling their equities in the USA and leaving because of the threat of US sanctions and China sanctions and tariff fight. Uh, there is also evidence of Pakistani India war breakout, which is not considered to be believable, as both sides have nuclear weapons. So, but we will see if it will stay as a skirmish or if it's going to go to a full-scale war between the two very populated countries. One is 1.5 million, is the other one is over 300 million people. So we'll see what happens with the. Will it be with sticks and rocks and stones, or will it be with nuclear weapons? We'll see. And there are other news. As I can explain you right now. For the USA. The housing I mentioned already, extreme purchasing, even with the very high mortgage rates of 7%. But these are limited to certain areas. As I'm following the different states of USA, the states which were preferred or cities which were preferred before, like Texas area, in the Texas state, and also in Florida state, like Miami, and other countries, they are falling like a stone falling. Okay, people are not buying, especially as I know, the Canadians are selling and leaving their summer houses in Miami, going back to Canada, okay, or maybe some other countries in Europe. Europeans are leaving as fast as pace. Europeans are leaving the American equities. So this is not a wishful thinking. This is an happening of, if you start a war, in Europe is important. Europe has more population than USA. USA population is 330 million. Europe is about 500 million. And they are both rich countries. And the market wise, China will rightfully move toward, instead of selling what they can't sell in USA due to sanctions or tariff sanctions. I call them sanctions. They are not tariffs, so they will start pouring them into Europe. Well, Europeans, I don't think they would bother because they don't produce those items anyway. Instead, if it's cars, that's a problem. They have the German and French made cars, so they can put tariffs on those. But on other items like daily staples, they were coming from China anyway. So they'll just double down on their consumption. So as a result, we may see a lot more obese people in Europe soon, like USA. But now that China stopped buying the pork and other, let's say, agricultural products from USA, so there will be an excessive amount of stocks held on hand. So we don't know where USA will try to market them because Muslim countries cannot consume the porks. So maybe they'll double down on their own, people. So we'll see. We'll see who's going to eat those if China doesn't buy them. India is having going to have a big agreement with the USA, which they were already selling to USA. But as China is their biggest, let's say, enemy, although they seem to be on the same page for the BRICS, as you know, BRICS is India for the I and C for the China, but they are competing for the leadership. So in reality, that may not become a fruitful result because China and India are not very friendly to make a agreement. They are being clashed by Trump. Uh, Maybe this was the plan. Maybe this was the plan. Who knows? Who knows? So I acted like Trump, I think, but I don't have the yellow hair. So very basically, this is the situation for the Turkish viewers. The government just announced how much they are going to borrow in June, July, August, and so it's what they are paying. They are borrowing about 10-20% more. So this is just like rotating your plastic credit cards, not paying them, just paying the lowest section, and just keep adding to your loans. So they advise people not to do that, but the governments do that, because they are not going to pay them. Their people are going to pay them. Just recently from USA, the American government workers, now with these figures coming out, they are found to be losing their salary purchasing power in the USA as well. Well, this is a common situation. This is common for all the world. All countries are ripping off their own countrymen, to survive without the tax. If they don't cut on the prices, they will also increase their inflation by printing a lot of money. So it's a double-edged sword. Basically, this was my month-end situation. So what can we expect from the recession, stagflation? These are very good news for gold, actually. However, we see gold above 3,300, like 10, 13, 15, although it should have risen a lot today, a lot. Why didn't they? Because the people got stuck in the stock exchange. They have to sell their stocks. American stock exchange is falling like a stone today. So people have credited positions they have to close, so they will sell their most valuable, quick sellable assets, which are gold, crypto coins as well. Anything that's cash. They need cash quickly to close their loans. So basically, if I go to CNN website for business, I would just share you with that tab. Okay, I'm sharing it with you. I'll just enlarge it to the natural size. As you see, stock exchange is down. About Dow is down 1.16%, S&P 500 1.5%, and Nasdaq close to 2% at the moment. U.S. economy goes into reverse from Trump's abrupt policy shifts, although they claim that Trump says it's all Biden's error. It's from Biden's time, not my time. And we can see the fear indicator still under fear, coming a little bit back from extreme fear, because the fear won't help you once you get bankrupt. Okay, it's too late. And so these are the news from the CNN website. While I'm showing you, you can see consumer spending soared in March as Americans try to get ahead of tariffs, exactly like what I told you. People are buying like crazy. Did I share this with you? The business part. Uh, it looks as if they've been shared, but okay. Now I can show them to you. Consumer spending soared in March. Okay, and similarly, I will show you the initial chart of the stocks. Dow minus 115, S&P 1.5%, Nasdaq almost 2% down at the start of the day. Consumer spending soared in March as Americans tried to get ahead of tariffs. Stocks tumble as economy contracts for the first time since 2022. Yes, stocks are tumbling. US economy goes into reverse because recently another number this morning came in. The growth GDP fell. Okay, yes, these are all yesterday's old news. UPS is cutting 20,000 jobs. Trump easing auto tariffs. So these are yesterday's news. Yesterday news are old news. Okay. As for Turkey, we will see gold prices increase, but tomorrow is a holiday in Turkey, maybe worldwide, even including China. It's a longer weekend, longer holiday in China. So once we start coming back from them, depending on how these tariffs fights go on, it's not, tariff taxes go on, we will see how gold and silver and others are shaped. Silver is not in a favorable position. If we are heading into recession, there will be less silver demand. But when to get out of recession, countries only have one solution: printing money. So with that, inflation will increase, and gold will, although gold will sell during recession, it will be the first one getting out of recession with the more money printed and inflation. So it's all pricing them in advance, not afterward. Gold prices things in advance, okay, not later on, just like other markets. Okay, I hope to see you next month. Well, that's tomorrow, but and I hope you enjoy this video, and wish you all the best. See you again next month.